I was going to title the thumbnail today, "It's a Hot Mess." And I thought I would kind of pull back on that because it actually is a pretty serious matter. I'll explain what happened today if you're not paying attention. I know it's busy Thanksgiving weekend and all. If you didn't catch it, the CME basically was forced to halt all trading today on the futures and options markets. They included FX, commodities, treasuries, and index equity index futures. And what caused it was a data center that is located in Chicago. It's run by Cyrus One, and there was a cooling issue at this facility which powered, CME's electronic trading platforms. So for several hours, including overnight hours, there were no live prices or execution capability on those platforms. So brokers either suspended trading or they scrambled to with internal, it says, pricing estimates or alternate venues. So again, if you were trying to trade or close out futures option or FX position during the outage, my understanding is you could not do that. There were no live prices, no clear mechanism to execute trades or liquidate positions. So on a day when I see in a shortened trading market for gold and silver as well, that the price of hard assets really skyrocketed today. Gold was up over $60 an ounce today at $4,218 I show by Kitco. Silver up over 5%, $3.08, closed at $56.44. So again, the whole hard asset question or debate that's always had is sometimes you get the old adage, if you don't hold it, you don't own it. This drives the point home relative to these trades, everything done on electronic platforms and with the use of these data centers. So basically this thing overheated. There's a picture right now. I saw a story I'm going to share with you. There's a picture of this data center, right? Who would know? It looks like just a commercial office building in Illinois, but it caused the whole entire CME to have to shut down. So, but it brings into context, from my perspective, this idea of AI, the data centers, the overwhelming amount of reliance that we, the markets, the financial system places in this infrastructure, and more importantly, on the assumption that it's going to operate appropriately, or properly. So, as we become more dependent and more reliant on these AI centers, data centers, as they're getting built out, in massive projects across the country, I think it is something for everyone to take a pause on relative to what does it mean for the lenders and for the investors in these massive projects, and how do you properly value the AI data centers when this kind of stuff can happen, when you've got a massive infrastructure risk, even if you can get the power to the darn things, right? And all the topics we've been sharing on prior videos. So I did see a story that kind of brings this all full circle, addresses the key points I think are out there for to marinate on and give some real thought to, because that's where everything is heading right now, right? That's where all the big tech companies, that's where all the gain in the stock market is right now, is all pushing towards this new system, this AI data center driven economy. I don't know if that's the right way to put it, but you know what I'm saying. So before I jump into the story, as I always humbly ask, if you're not subscribed to the channel, please subscribe. I do appreciate you guys all being here, and share the videos with people that you think might have some interest in this content. So out of the Bloomberg today, the title of the story is "AI Can Cook the Entire Market Now." That's a bit of a tongue-in-cheek article. It was written by Tracy Alloway and Joe Wiesenthal. And I thought it was a very long article. I guess you can go look at it out of Bloomberg again today at 9 o'clock this morning. But it raises some interesting points. And what it starts out by saying the big news today is obviously the outage at the CME. A cooling system malfunctioned at one of the company's data centers. And what the authors of the article do is they relate, and they're referring to these points brought up by Mr. Paul Kudrowski in a recent Odd Lots episode about the durability of data center assets and how they're being treated by the market. And I want to share some of those, I think, salient points and thoughts with you. As always, get your input as well. But don't think this doesn't pertain to you. It absolutely does. I don't care whether you're in the market or if you're in the market directly or indirectly through retirement funds. If the markets start to waver on this whole AI data center trade push, right, and build out, and debt structuring, right, through all this private credit, there's a huge, from my perspective as a layperson, huge amount of open space for this thing to collapse very, very quickly. And it will affect everybody and everything. So they say the lifespan of these data centers is actually not that long. And they're saying maybe 3 to 4 years. So it brings up a couple good points about the way these chips, the NVIDIA chips, are being used now as opposed to years ago when they just stored data and things like that. It says you have the risk that tenants are rolling through and no one knows what that actually means for the structure of the debt. And you get this asset liability mismatch, right? So the market's banking on a much longer lifespan of these data centers and the chips than and the tenants that are signing on these huge obligations, then they're actually going to be able to deliver. It says you have the emergence of GPU-driven data centers using products like chips from NVIDIA, and those have much shorter lifespans. So depending on the uses, there's 2 different reasons. This article says why the lifespan and therefore the depreciation schedule of a GPU inside of a data center may be very different. And that was brought up by Michael Burry, I think, a couple weeks ago as well. So it says, look at the nature of how the chips are used inside these data centers. When you run using the latest, say, NVIDIA chip for training a model, those are being run flat out 24 hours a day, 7 days a week, which is why they are liquid. They require liquid cooling. They're inside of these giant centers where one of your primary problems is keeping them all cool, all right? And case in point, what happened today is this center in Illinois, it got overheated, or the cooling systems failed, okay? So it says you have, in these kind of more, let's say, updated NVIDIA chips, it says you have thermal degradation of the chip. The chips have been run hot and flat out, so probably the useful lifespan might be on the order of 2 years, maybe even 18 months. And then going back to what happened today, the Aurora, Chicago campus in question is operated by CyrusOne. The campus boasts multiple cooling technologies, according to the CyrusOne website. It was also it's at a pretty cold November night in Chicago, which shows just how incredibly hot these chips, are running. And it says there are probably 2 different ways, extreme ways of thinking about this particular data center outage. And it says its relevance to the wider debate over AI valuations. Back to the theme of many of the shows I've been doing the last couple of weeks. The first is an example, he says, of the centrality of data centers in the modern world. Without this one campus, the entirety, right, of that one building in Illinois looks like a random commercial building. It says the entirety of the U.S. futures trading basically came to a screeching halt for hours. Data centers are clearly vital infrastructure for which tenants, right, may be willing to pay a premium, including the Metas and such. We've been discussing that. On the other hand, the other way of looking at it, he says, is through this Kudrowski prism, the Kudrowski show I mentioned earlier on, is an example of how financially fragile this whole build-out actually is. With highly levered real estate structures, long-dated funded and asset lives that may be closer to race cars than to utilities, all wrapped around chips that only work if the cooling, as of course, and energy actually holds. In fact, you might say it shows that the same underlying thing that makes AI data centers such a compelling story, right? Packing ever more power-dense GPUs into the same footprint also makes them operationally brittle. Cooling is now a single point of failure for the technology and by extension, perhaps even the capital stack sitting on top of it, okay? And again, that's to the thumbnail today. Single point of failure. And for the investors, okay, and for the lenders, all the big banks, all the private credit groups and money management firms, I would say they should be, if they're not, should be actually wondering now, what is this infrastructure really worth, okay? And I think today's CME issue, the outage, will maybe start to drive that point home, and we'll see how it impacts the markets. All right. Hope you thought that was an interesting topic. It's a more of a food for thought. Some very, very excellent points raised there. But this is infrastructure driven now. Okay. So even if you do get the power grid up to speed and you get all these data centers open, you have to keep these darn things cooled. I'm definitely not an engineer. I'm just sharing the story with you, and hopefully you will consider it, share it. If you guys enjoy the content, leave me a like. If you're not subscribed, the subscribe button for me. We'll keep growing the community. With that being said, I will talk to y'all soon. Bye.